Because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, folks, we're going to go through the indices and show you the ABCD patterns. We've already done the Russell. This is the the NASDAQ. You can see here at one time we were down about 800 points, and now we've rallied back to be up about 15. So it's had a rally up to the 50% level. But that's a big move, folks. You can see the ABCD there finishing up there just as nice as can be. All right, now the next one we're going to take a look at is the old stop and P. We'll get this up. Oops, I forgot about that. That's how we used to call it back there in the old days of the Chicago Mercantile Exchange. There's where we are right now. We had a heck of a rally here. Bring this up on the 4-hour, and you can see it also made the ABCD to the downside. There was the first one, and then, of course, the second one was this one right here. There's your AB, CD leg, and, of course, when you have a big gap down like we did, gap down more than 50 handles, all you have to do is to add the 1.27 to the CD leg, and we'll get this up here, and you'll see that that's where we come up to right on the old money here, almost exactly at the right price. It comes within 10 points of the exact high. And I measured it off of that one. So all we're doing right now, as you can see here, we just made a 50% retracement of the high that we made here on Thursday. If we take that out and look for the 382 of that move that we made right back here, you'll see that we came in there just about spot on there, up there at 38. So that's just completing. Now, this is different than some of these other days where we've had these tremendous runs. So it's getting up there, but it's slowing down as we get into an area. This is very bearish, folks, what we're looking at in the market. I'm sure you're aware of it. Even though the market's rallied a lot, it is still kind of more than kind of bearish. It's very bearish. All right, now we're going to look at the Dow Jones. It also made a beautiful ABCD here to the downside. You can see it right here. This is the 4-hour. There you go. You can see it right here. I'll just draw it in so you folks can take a look at it. There's a intermediate high, and she comes in right about there, a little bit lower by about 100 points, and now we rallied. We're almost making an ABCD here, as you can see. But let's just do this. We'll go to the hourly chart, and we'll see how we came out of here, because, see, it's totally different than the Russell. You notice it's backed off here to the 61% retracement, and the other one didn't do that. But here's where we are now. This is our big high, well, secondary high. Remember, the high was, we're down 10, almost, well, at this point here, folks, we were down 10,000 points in the Dow Jones, 10,000 points since our high that was made. Okay, there's our high right here. There's our low coming in right there. So I would be really, today or tomorrow, watch for this 382 retracement right into this area, because if you draw that in with the ABCD format, there's your X up there. There's A, B, C, and D. Takes you right up here, another 500 points, and you'd be looking at a 382 retracement. And if you like to do the things that Dr. Andrew Lowe did, we're going to have some repetition. Because if you look at the last rally that we had that went from 47.6 up to 48.9, we're just going to draw that in to show you what that value is going to be. Just put that up there like that. You can see that value here, it's off by a little bit. Let's just try to do it right this time, Larry, and we'll be okay, I think. Let's get the old pencil out, and we're going to draw from there right up to there, because that should equal this next rally that we're in right now. And you'll see that would bring us almost to the exact level of up in this area right here. So watch that real close, because you've got an ABCD move here. And Gartley said, sell the first ABCD in a bear market. And this is the second one, but we're looking at the third one coming in here, up here at 47,697. Maybe it might take 2 or 3 days. That would be ideal. If you could get this to rally up here, maybe even all the way to Friday, like a 4-day rally right up. Well, it's not, they're so volatile that I don't think that's going to happen. But if should it happen, boy, that's going to be what we call Christmas Day, because you got a little 5-day rally at the 382, shut the front door and raise the rent, back up to truck and put a put on or go short. All right, now we've got those taken care of. Now we're going to take a look at the gold and silver markets here. We'll draw this up here. Now this is the gold for today. It's had some real wild swings in here, and it's been following really nicely. There was your low that came in. There was your high. Now we're rolling over just a little bit. But if we take and look at this on the hourly chart, folks, we had some whiz-bang stuff here last night. This is a $200 drop in gold, folks. We go from $5,200 to almost $5,000, $180 drop in gold. Okay, now let's get these out of the way here, because those are from another chart. There's where we are right now. The market rallied back in gold. I'll just bring it up so you can see it. It rallied back right to the 61% retracement. Okay, and then what it did, remember, 180 down. Okay, then 120 up. Okay, then another 80 down. It's had a $400 swing today, up and down. Nothing like what happened in crude, because crude is going to knock your socks off when you see that one. But there's our low right there, and it's probably exactly at the point 382, which it usually does, and there it is right there, telling you that strong support has come in. Now, what we need to do is to look at the silver market, because silver's been a little bit more bearish, but it's still holding its own. It hasn't broken down. Had some major support down in here. There was our number up here. If you remember, we had the big break, and here's where we were last night with the news coming in about the war. What did silver do? It dropped $5 an ounce and then goes back $5 an ounce. Well, all it did when it did that was to complete the ABCD pattern. That's all it was doing. There's your ABCD right there. And, so that's all that did. Now it's coming back near a nice level right in here. Now, if silver does continue to go up, and I'm not sure that it is, but should it do that, you would also have a very nice ABCD pattern on this one, because there's your X, there's your AB. Oh, shut the front door. See, it's just too sensitive, but we're going to do it again to make sure we get it right. There's that one, and then this one clicks on. There we go. And then just move it over here like that. And that'll tell us we should get up to right about there. And that's where you want to be looking to possibly, well, you should be looking to be a seller of silver there, because you've got an A, B, C, D coming in there at 87.50, and that's only up another $3 from where we are right now. This thing is swinging 5 to 7 cents a day, folks, so it's not for the faint of heart. We'll be right back.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Okay, folks, this is crude oil. I believe, without a doubt, I haven't checked the figures, but this is probably the wildest day in the history of crude oil. It's my opinion. You can see the low back there on the 26th. We were trading about $62 a barrel. We had the big rally here overnight. You can see we closed at 91. We opened at 97 or 98, and we went up to $119.72, 48 cents a barrel. And then we came down and hit the 382. Okay, now once we broke that 382, that tells us that, oh, there's a probability now that we should be looking for a change in trend. And you can see we did make this small ABCD pattern right here. Now, this is a 60-minute. So what we're going to do now is we're just going to go down to an 8-minute so you'll be able to see what we were looking at. And there it is right there. There's that same little pattern that we were looking at. There's your A, B, C, D. And where does it come in? There's your big point up there, 119.42. Then you make this move like this, and it takes you to exactly 382.104, and it's made $10,000. Folks, this is a $70,000 move. Look at this. It's really hard to believe. You got 30 up, okay, 30 down. That's 60,000. Remember back on January the 10th when we had that 500-point move up and down in the Dow Jones, which is 50,000. Look what this has done. This is even greater. The good part about this, the margin on this is not very much compared to what that margin on the gold happens to be. This should be it for the gold market, folks. In other words, this is probably going to be it for the season. And I've said several times the reason why these crude guys like, the crude oil in war so much because they get evaluated way up there. Let's just bring up the long-term weekly in this, and you'll see here, this is where I thought it was going to stop. Went all the way up to the 78% levels. Had a chance to stop there, but once it gapped above it, then that's nothing else you can do. So we did get up to this level right in here, which the 119, and the old high we had back here, when we had the Ukraine war was 130.50. Okay, so we retraced 78% of that. And look how we came down. This is a huge, big candle from from up and down. Boy, they loaded the boat up there from the short side, so that's what we're paying attention to here now in the crude oil market. I haven't looked at the what I will do this week. I will try to get on Wednesday. I'll have Mike Moore of More Analytics come up to talk to us about the energy complex, because it's parabolic. So we got to be really careful as we watch these things here unfold. Now, talking about something different, I've got two of these up here. Let me get rid of this one. These are the soybeans, because we had some big patterns happening in soybeans here, and that's mainly because of the soybean oil, folks. You can see here, there's where we were here. It's backed off quite a bit from the level. I think we get the weekly up here too, because it'll give you a rough idea. See, our weekly was right at the 50% of this high right back in here that we hit. It's down about 20 cents from that level. And if you blew it up just a little bit, you can see there's your ABCD pattern that we were just talking about. It's this one right there. And there it is right up in there. And it's backed off about 25 cents from the high of that move. Now remember, the soybeans, when they convert the bean, 20% of it is in oil and 80% of it is in meal. And the oil has been running the whole show, because oil can be used as a energy. They break it down into energy. So if we took a look at what's happening in the other part of this meal, which is the meal, you'll see that the meal just barely moves. Listen, I haven't even checked it yet today, but it's probably down big time. Nope, it's down a little bit, but not much. But there's your soybean meal. You can see it can't even make new highs, and it did go from 320, backed off a little bit today. So totally different. And this is 80% of the soybean, folks. The meal is 80%, and the oil, which is up here, we'll take a look at the May oil. Uh-oh, folks, I'm getting ready to sneeze. Too late. Sorry, folks. All right, there's our ABCD pattern here in the oil, and we went a little above the 1.61 expansion. We got to 1969. Oh dear. Maybe this will save me here in the next 3 minutes, but we should be watching for the market to back off. So I think that oil market is pretty much finished. In fact, we should take a look at the heating oil, wow, and the gasoline. Oh boy. Sorry, folks. I'm feeling great. I don't know. I get this. Must be dust or something. Well, it shouldn't be dust. The house has just been cleaned. Hold on here. We'll take a look at the heating oil in just a second here, and then we'll be all right. If I can find it. There it is, HO. Oh, gosh. Might have to take a break here. Hold on. Let's get the daily up so we can see it. Well, they've had a little bit of a ritual.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors. This portion of Trade What You See is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Okay, folks, I'm going to go through here. I've had an allergy attack of some kind. I feel pretty good. It's just that I couldn't stop sneezing. And as you can hear in my voice, it's still rasping around. And we almost made a high at where we had the Ukraine war. Look at this, okay? So that's, remember, in crude oil, we hit $130 a barrel, and from there it went to 55, and then 55, it went to 119. So this is where they really come in and sell that stuff. So there's never a shortage of it. It's just that it's hard to get it sometime. And with all the news coming out of the Straits of Hormuz, you know, who knows what's going on, and I don't. Anyway, that's what's happening so far in the heating oil. We'll take a look at gasoline next, and it's probably also had a heck of a run. Well, it has to, because that's what they're there for. Well, look at gasoline. It's it's dropped 50 cents a gallon, folks, since the high that it made here this morning. There's the daily. Let's look at this on the weekly, because we haven't seen gas at this high. Oh, did we take out the, no, we did not. Didn't even come close. Okay, there's the high back in the Ukraine war. And as you can see, all we did was we almost made the 61% retracement here up there at 325, and now we've dropped 50 cents a gallon, and we're almost unchanged on the day now. This is a weekly, on the weekly chart. Let's look at it on the daily. We've given up quite a bit. We're almost there. That would be the spot where it gets unchanged on the day, but that's not there as of yet. Okay, all right, we'll get this out of the way here. I've already talked about the British pound. I want to go next. Well, we've already talked about the oil, the soybean oil, and we've talked about the soybeans. What they're going to do, there's the soybeans themselves. And the next one we want to talk about is the wheat market, because it also, and corn. See, corn is used as energy because corn oil can be used for energy. So we'll take a look at how high corn got during this run. And you can see it did jump up a little bit more. We almost made the 1.618 here in the corn market last night. We were up at, 475. We dropped 20 cents into that move right there. So that was the ABCD of that move. But with this strength like that, you'd have to extend this out by just a little bit to 1.27, and that'll get us closer to where the high should have been with all that news that was going on. Let's just see how close it came. Okay, 473, and the high was 476. So within 3 cents now, it's 21 cents below that right now. So it tells us something has happened in all these things. With a move of $70,000 today up and down in the crude, folks, there's a really high probability that high we had today is not going to be seen for quite some time unless they, something else happens. And believe me, anything can happen, and it usually does. So let's remind ourselves of that, okay? All right, now the next one we want to go back to, we've already covered the pound. I need to go back and we need to look at the other currencies that we looked at, starting with the dollar index, because it looked like the dollar index was going to turn around, and all it did was go up and make a slightly higher high by just a little bit, and then it's reversed. That's why when you looked at we were looking at the long side of the pound. I've already covered that, but I want to show it to you in the eyes of the euro, because the pound was an easier trade because it was making higher bottoms. So here's the euro. You'll see it's making lower bottoms. See, we made a big low. We even went lower by quite a bit today, and look how much it's reversed. Okay, the pound didn't do that. The pound didn't even take out these lows, and now it's higher. So that's why you want to be buying the one that is the stronger of the two. If you're going to sell it, sell the weaker. That's right out of Jesse Livermore's book, Reminiscences of a Stock Operator. So that's important to remember that, because you want to buy the strongest and sell the weakest. Do I always do that? No, but I always tell you, do as I do, or do as I say, not as I do, okay? Because I sometimes become a little bit too emotional as a trader, and, that's not true, because I don't watch the machine that much. All right, get this out of the way here. And I gave up being emotional many years ago because I've seen everything happen more than once. There's the dollar index out of the way. We've got the corn out of the way. The last one we want to do is wheat, and thank God they're still eating pasta, cookies, and pizza. So we'll get the wheat up here. because it's had a heck of a run here. And move that there, and we'll get there. You can see it just jumped off the top of the page here today. And remember down here, nobody wanted it. Nobody wanted to eat cookies, pizza, and bread anymore. But by golly, it's still popular, and we've rallied $7,500 here since January when we had this real strong support down here. Now let's look at this on the weekly basis because we probably had something. Oh, gee, it hasn't even made a 382. Look, we have to upgrade this, folks. Hold just a second, refresh this, and we'll get it there. Is that correct? No, that's not right. Let me do the daily here just to be sure I've got it right, okay? Because that says 606. Yeah, 606 is correct, but the high was 640. You see, so that's not been populated in the data yet today. So let's try it one more time, and then we'll forget it if we can't get it done correctly. There it is. It's in there now. So there's the big move that we had. Let's see what it did on the relationship for the last big move we had. And that came in right about there at the 618. Okay, now let's play the devil's advocate here and do the things that we do with our little 382. So here's the move that we had. Okay, there it is right there. If you wanted to be looking at the 382s, well, there's a whole bunch of them in here. This one, there's your first. This is a 50% one right here. Looks like it is anyway. Oh, just 382. The next one, 382. The next one right here should have been 382, almost exactly, and it's still going down. So watch for what you'd like to see is a nice ABCD like this. Hold on, let's draw this. Watch for this, folks. The first counter trend move now in wheat, you want to get short because, as Gartley said on page 222 of the book, that look for that first ABCD in a new bear market. We're going to assume this is a new bear market, and we're looking for that ABC that we can possibly get, and that's what we're watching here. We missed a 382 on this one by a penny, but that'll give you another chance. So that'll be one of the things I'll have my eye on is to watch this as a retracement. And then, hopefully these things are going to stay up in this area and inflation won't get too bad because these things are so oversold on a long-term basis that it should be okay. I think we're getting close to the break. Let me double check here, see if I can make it through here. Yep, we'll be back here in just a second here.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, folks, I wanted to explain a trade that we had from last week on Friday. Remember, we were selling this ABCD here at 158.10. Okay, well, this early this morning when the markets were working, a Sunday night when they first opened, what it did was it opened 40 higher, and our stop was 30 pips, so we would have been stopped out right there. I mentioned that that's what's happened. That's back into that same area, but we would have been stopped out at 158.40, and we bought at 158.10, so that was a $300 loss in that particular trade because you didn't know if it was going to go straight up or not, but we don't know which ones are going to work. The thing is, it's not how much money you make, it's how much money you don't lose. So try to, keep that in your mind as you're always watching these things here unfold. Now, we'll look at the same thing as the British pound. See, we were buying the British pound down here, this 133, and it's acting okay. Took out the previous low by just a little bit, and it's almost taken out the previous high, but not as of yet. So your stop is right below there. So if you lose on that, your loss is going to be, right now you're up about $400. So the worst that would happen is you'd lose $300. So that's the whole principle of, why you want to get below that level. See, our stop was right at that right below that level because we bought it right there. And now that's where it is right now. So just keep your stop. Well, you can put your stop at break even actually at 133. That's what I'd do because it gets down another 80 points. It would take your $400 profit away, and you don't want to have it go to a loss. So put your stop at even 133, and we'll see how it ends up. But it's holding okay. Now, let's take a look at the Australian dollar because it's getting a lot of press for some reason. I haven't looked at it, but I did hear about it on the Bloomberg today. And there's the reason why we had a big outside day so far in the Australian dollar. Let me refresh this, folks, for get the price. There we go. There's where we are right now. Well, really hasn't done very much. It's made a lower low, had an outside day to the upside, so it's still acting okay. On the last little run here, I believe we just made it's a little more than the 382, but not. No, it isn't. It's right there. We've hit it 1, 2, 3, 4 times. So there's really strong support here in this Australian dollar, and if that fails, that means that you're probably going to go down. But gosh, look how long it's been here. That's really a powerful chart, folks. So that means that dollar could be moving against the U.S. dollar quite a bit. That might help along the pound also. Okay, so there's another one that we're watching right now. We've had a question about two things. One was Apple, because we had a really good ABCD coming in Apple at hold on, at 252. We'll get this up here so we can see it. Let's see if we got there today yet. Ooh, boy, did we get close. Hold on just a second here. Sorry, I can't answer the door right now. I'm doing a radio show. See, there was 252. The low today was 253. So that's what we have going on here right now. Okay, I don't know who's at the door. Hope it's not the police, but nothing else I can do about that. Wait till the break comes up, and I'll try to answer the door. Okay, there's what we have going here. In fact, it's made a lower low and a higher high. It's at an outside day. That's actually pretty good for the Apple holding up. But that is the ABCD pattern. Comes in right there at 52. The low today was 53.68. So that's what we're watching here so far today. Now we need to look at Tesla too, because it broke below the coveted $400 level shortly. So we'll see how it held up here in just a minute, and we'll go. Hold on one second right here. ESO, you know what that is? That might. Okay, yeah, Tesla did break below the 400 level. We're getting real close to the real strong support here at this level here. That's that big same support that we had down in here. We broke it, rallied back. So if we get much below here, folks, we'll be looking at a lot lower prices down here at about 324 in the market right here. So that's another one that is going on right now. Okay, hold on, just get this out of the way here. And then the other one is the bank stocks, folks. JP Morgan is, as you know, a lot of these bank stocks have been hit because of the private equity things not doing well and a couple other things. But we'll take a look at JP Morgan, and because it made a big high up here, now it's backing off quite a bit. And there it is right here. Let's see if it's down today again. It was down, and it's come back. It's almost getting to be almost unchanged now here. Jay, that's probably why the Dow's been having a pretty good rally. Oh, we made a big ABCD here, folks. Shut the front door and raise the rent. There it is right now. Oh, my gosh, I see it. There it is. Hold on. There's AB. Well, we might get a little bit more of a rally in this, because that looks like it's going to be bingo bango. There it is right there. Yeah, well, there was Friday, and it was lower today, and now it's come back up. There was another 3 ABCD coming in here also. So there's your ABCD right here. And that didn't, that's way down here. So that didn't count. I was thinking this would be a good one, but it didn't do that. You can see it misses it by quite a bit. But there's your big one right there coming in at that point. And that comes in at right almost where it's trading right now, 285. And it's trading at 285 with a low today of 281 that opened. And so it's rallied $3 into that level right here. Okay. So that's what we're paying attention to right here. And then the last one we have in the stocks is is Amazon. We'll get that up here, and that's who I thought it was on the board hold on right there. Just a second here. Okay, there it is right there. And there it is, Amazon. It's already completed the ABCD, and it's been down for quite a bit. And it's down a little bit today, but that's pretty much it. The overall nature of the market, folks, is still very bearish because of the fact that we've broken below the 382 on the New York Stock Exchange Index. That was something that I focused on in the newsletter this past week. And as long as that's not taken out, we are in a bearish moment. But it's actually holding up incredibly well, considering they're knocking on the door to World War III. I don't think it's going to happen, but it could, and you just never know. So anyway, those are the things that we're paying close attention to here today. Oh, good news, good news. Tomorrow, believe it or not, we've got Stan the Man Harley's going to be our guest on Wednesday. We're going to have Mike Moore of More Analytics. On Thursday, we're going to have PT Webb. Paula Webb will be on. And on Friday, we're going to have our live trading. And then after that, I'm hoping to have Jeff Hughes on, but I haven't confirmed that as of yet. So we got some good guests coming up and give us some good information for these volatile markets. And all I know is ABCD, and that's the one that works for me. So let's keep that in mind, and we'll go to the next section here and wrap it up. And what I'll do is I'll bring up that chart of that New York Stock Exchange Index so you can look at it yourself, the fact that the 382 has been broken. So we'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, this was the 382 on the New York Stock Exchange Index. You can see we broke that here on Friday. We're down again today, another 270 points. So we're trading down into this area right about here right now. Bitcoin is still going lower. It's up a little bit right now, but that still looks lower. One other one that I wanted to mention to you is this one here from Jeff Hughes. This shows you over the last several years, you'll notice when the market's going up, how the strong bull markets, the percentage of stocks above the 200-day moving is really good. And in a bear market, you see the number below the 200-day moving average. Look at this one right here. This is a weak bull market. This is what we've just been through. More stocks were below the 200-day moving average, and as you can see, they're still rolling over. So that's another reason that we're going lower in these things. That's a type of momentum of what's going on with the market. I'm about ready to start to sneeze again. Sorry about that, folks. I don't know what it is, but I'm feeling great, looking great. Well, I don't know about looking great, but I'm feeling okay. So that's what we're watching in these markets. We are looking bearish. Dow's down just about 500, S&P down 35, 37. NASDAQ is now down 50 after being up 60. So market is still a little bit bearish, but nothing under the sun. In fact, it's held up extremely well, given the fact that we had such a huge move in crude oil overnight. And then to see a $70,000 swing in crude, I mean, 30 up, 30 down, and then 10 and 10 to the downside. Boy, that's a big move, folks. That knocks the socks off of the record of gold that we had back on January the 12th. If you remember, we had that big move in gold from 58.20. So that's what we're watching here today, folks. So tomorrow we have Stan Harley is our guest, so live every day in an attitude of gratitude, and may God bless.
Steve Rhodes